Good morning, Sydney and beyond. Welcome to the Morning Outlook by Kalkine TV. My name's Sage. And the Australian share market is expected to rise on Tuesday, according to the latest SPI futures. The ASX 200 is expected to open 78 points, or 1.05% higher. There was a muted trade on Wall Street. The Dow Jones fell 0.58%, the S&P 500 ended flat, and the Nasdaq closed down 0.40%. The hawkish commentary was the focus of the investors, with Jerome Powell suggesting the rate rises could continue, with 50 basis point increases instead when they meet next in May. The Fed has inflation on their radar too. Facebook and Microsoft shares were both down last night. The ASX 200 could be helped by gains in the local energy stocks as European Union nations mulled over a Russian oil ban, while mining stocks could rise on firm commodity prices. And according to the latest SPI futures, the ASX 200 is expected to open 78 points, or 1.05% higher. And meanwhile, Atlas Arteria Group and health supplements company Blackmores Limited are a few stocks which are scheduled to go ex-dividend today. 5 out of the 12 sectors were in the green overnight. Energy minerals was the best performing sector, up 38.99%, with transportation coming in second, up 3.7%. The top laggards were technology services, down 12.01%, and commercial services, down 7.62%. On Wall Street, just reiterating, the Dow Jones fell 0.58%, the S&P 500 ended flat, and the Nasdaq closed down 0.40%. FedEx Corp was up 6.10%, as was Dollar General Corp, up 5%, and Best Buy Co. up 4% as well. As the investors expect further rate hikes in the longer term, the labour market is very strong and inflation much too high, Powell told a National Association for Business Economics conference. Occidental Petroleum was up 5.56%. Marathon Oil rose 3.18%, bolstering the S&P 500. Berkshire Hathaway's shares were also significantly up, and fertiliser company Mosaic was up due to the crisis in Ukraine. The Fed recently hiked rates by 25 basis points for the first time in 3 years to tame a 40-year high inflation. And meanwhile, on Monday, the Ukraine defied a Russian ultimatum that its forces lay down arms in Mariupol. While the European Union considered a possible energy embargo against Russia, we saw Shell and BP stock both rise between 3 to 4%. The Pan-European Stock 600 index rose 0.04%, and MSCI's gauge of stocks across the globe fell 0.24%. The FTSE rose 0.5% and the CAC fell 0.6%. The German DAX slipped 0.6% as well. Over to the bond yields. Just 2 days after the Fed rate rise last week, the 3-year notes yields rose above the 5-year yields, marking it the first time since 2020. It's a potential sign of a downturn when the short-term yields rise above the long-term yields, due to investors seeking safe havens to hold money for the longer term. Economists prefer the gap between the 2 and 10-year yields, historically being the indicator where inversion has signalled a recession accurately. For the last 40 years or so, it was reported by Barron's. And some people are also keen on the focus of the 3-month and 10-year yields to maintain track of the economy's direction. But following Powell's comments, the yield on Treasury notes rose sharply. 2-year yield in the US was up 2.12%, Australia 1.37% up, and the 5-year yield in the US was up 2.32% and in Australia up 2.24%. The 10-year yield in the US was up 2.30% and in Australia up 2.57%. The dollar index steadied at 98.49, and the euro fell about 0.3% to US $1 and 0.105 cents, after jumping 1.3% last week. Oil prices inch higher, and the oil prices jumped on speculation that the EU may ban the Russian oil. WTI crude rose 7.41% to US $112.46 US per barrel. Brent was at US $116.42, up 7.87%. And BP and Shell prices surged up around 4%. Saudi Aramco could be interesting to watch as well. The gold prices rise. Demand for the safe haven boosted the yellow metal. Gold also gained 0.75% on Monday to reach $1,935 US an ounce after losing more than 3% last week. Far East Gold's IPO on the 24th of March could be interesting to watch. And Japan's Nikkei 225 was up 0.65%. Hong Kong's Hang Seng was down, however, 0.89%. Aluminium prices have risen 4.3% after Australia banned the metal to Russia as a sanction against its insurgents of Ukraine. Nickel prices fell 14% and iron ore also fell after COVID cases have risen in the Chinese city of Shenzhen. Chinese travel stocks were down after the news of the tragic plane crash of a China Eastern passenger plane that crashed into the mountains yesterday with 132 people on board. Nose diving into the mountain at a rapid speed. The flight left Kunming City and was headed to Guangzhou when the Boeing 737 aircraft lost airborne contact over Wujiang. The Civil Aviation Administration of China were reported telling the press. Some very sad news there. But in travel news from Australia, the travel stocks have been given a boost, with not only Hong Kong lifting its flight ban to Australia, the federal government has decided to release the remaining 75.7 million Australian dollars pledged under the COVID-19 Consumer Travel Support Program, or CTSP, to support travel agents, I should say, and the overall tourism industry. Much needed after many years of lockdowns and travel restrictions. And that's all for today. Thank you so much for joining us on this morning's report, and have a great day trading. Keep watching for more of the live market insights and expert talks. Sage signing off for now.